Hey guys, welcome back. So in this video, I'm going to show you a very beautiful strategy using the smart money concepts and the fair value gaps in cryptocurrency, which will allow you to take high risk to reward ratio trades and make profits consistently. So without any further ado, let's get started. So in my previous video, as we discussed, there are basically two types of fair value gaps, and the fair value gaps are created when there is a sudden impulse movement of market, but does not come back in the future to balance that zone. So for example, if we look here in this area here, you can see that within this area the market is balanced, okay, but here we can see the sudden jumps in the market in this area. So there is impulsive move and impulsive activity of buyers happening in this area here. Now what we can see here at this candle, there is this big bullish impulsive candle, but market did not come back into this region. And also the wicks of the candles after and before this impulsive candle are above and below the percentage, or the almost the 35 from top and bottom. So this is a valid fair value gap. So there are certain points that you have to keep in mind. First one is that the body of the candle should be impulsive, and the wicks of the high and low of the next and the previous candle should not go below from top, okay, 35% from total percentage of the body, and also from the bottom, from the low of this current candle, the high of this previous candle should not go above the 35% from the bottom of this candle. As you can see, this is valid condition here. So this is a valid fair value gap. Also, the candle on which the fair value gap is forming should be greater in size than the previous candle, previous certain number of candles. So for example, as you can see here, this candle forming here is bigger than all these previous candles. So this is a valid fair value gap. And this is an overvalued fair value gap because you can see the market after the formation of this fair value gap moves in the bullish direction, and then it comes back here in order to balance this zone out. So we can draw the fair value gap at the low of this next candle and at the high of this previous candle. So let me just go ahead and take the rectangle tool, and we can draw the fair value gap, the overvalued fair value gap here. And this is an overvalued fair value gap because market is trading above its fair value. And as you can see here, the balance created in this fair value gap has been balanced by the market. As you can see, it comes back impulsively to balance out this fair value gap, and then again it starts to move in the bullish direction. So this is an example of the overvalued fair value gap. Now let's talk about the undervalued fair value gap. So as you can see here, again the same conditions apply here, and this is the detection of an undervalued fair value gap because we can see there is a formation of this very big impulsive candle in the bearish direction, and also the candle has high body to wick ratio that is above 60, and the high of this next candle and the low of this previous candle are also above and below the 35% from top and bottom of this current candle. So this is a valid candle for the formation of fair value gap. And the last thing that we need to check is that in this candle here, the body of this candle is bigger than all the previous candles that are forming in this region, as we can see here. So this is a valid fair value gap, and we can again draw the undervalued fair value gap from the low of this previous candle and at the high of this next candle. So let me just go ahead and draw that. So this is the formation of undervalued fair value gap, and this is called an undervalued fair value gap because the market is trading below what its fair value is. So in future, the market is supposed to come back, as we'll see in the example we'll discuss. Now these are the manual ways to detect the fair value gaps in the market. There is an automated way as well, that is you can use our fair value gaps indicator to detect the fair value gaps automatically on the chart. So let me just go ahead and apply this. And as you can see, as soon as I hit the apply on the indicator automatically detected these fair value gap zones. So let me just remove this rectangle so that you can see it better. So here we can see the indicator indicated that there is an overrated fair value gap. And if I go ahead and remove the chart till here, you'll see that the indicator will start to detect the fair value gap in real time and draw out this fair value gap zone as well, as you can see in this case here. So as soon as this overrated fair value gap formed, the indicator notified us that there is an overrated fair value gap to which the market is going to come back from future after going above in the bullish direction. The market will come back in order to balance out this fair value gap in the future. And if we forward play the market, we will see that happening live on the chart as well. There is a formation of another fair value gap, but as you can see, the market came back in order to balance out this fair value gap here that we detected earlier. And here as well, we can see the market detecting the undervalued fair value gap in real time, and it notified us as soon as the fair value gap formed. So we can use this indicator to detect the fair value gaps automatically on the chart for us. And now once the indicator is applied, let's go ahead and trade using this indicator. So since here we can see the formation of this undervalued fair value gap, and now we should be looking for opportunity to take trades using this indicator. And the way we do that is there are basically two things that you need to keep in mind. One is that we will only take the trades at the undervalued or overvalued fair value gap when the market makes a full swing. So for example, if market comes back here, we will look for any confirmation that can allow us to take buy position or take a long trade, and then we'll wait for the market to come back to this zone to fulfill this gap. So let me just go ahead and change some settings in the indicator so that we can see it a little bit better. So let me just go ahead and remove these plots, and here you can see that this is the formation of an undervalued fair value gap. And if I follow play the market, we can see the market moving in the bearish direction after the formation of this undervalued fair value gap. Okay, so here till now we can see the market moved in this area here. So there is the formation of this bearish trend because of the formation of these consistent lower highs and low lows. So the market is moving in the bearish direction at these lower highs and lower lows here. So we can draw a bearish trend line at the lower highs of these candles, and then also we can look for the breakout of this trend line. So for example, if we look here, we can use this trend line as a confirmation for entry, and once trend line has been broken here, we can see that market moved above this trend line, breaking this trend line, which means now it's time for the bearish trend to get reversed into bullish direction. And also we have a confirmation that there is a fair value gap at these levels here. So market is supposed to come back to this region to fulfill this fair value gap. So let's see what happens, and let me just forward play the market. So as you can see, market did come back into this area here, into this undervalued fair value gap to fulfill this area. And this is how we can use the fair value gaps indicator in our trading strategy to identify and trade the fair value gaps. And this was just one example, and there are multiple scenarios and multiple trading strategies that you can make. So let me just go ahead and show you how much movement we were able to capture using this fair value gaps indicator. And if we just go here, and we can see we were able to capture this movement of the market, which is here denoted in this by this curve here, because at this swing low we took our long position, and at when the market reaches here, when the market reaches this fair value gap zone, we can close our position. So this is how you can use the fair value gaps indicator to take long and short positions in cryptocurrency, and specifically on the Bitcoin. Just one thing, I would advise you to use this indicator at time frames like 5-minute, 10-minute, or 15-minute. You can also use the 12-minute time frame to make your trading strategy a little bit unique. And this trading indicator works very well on the 10-minute and 15-minute time frame. As you can see, we are using it on 15-minute at Bitcoin chart as well. So I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.